I was just going to say, I think my other questions or more things I want to cover will more be part and parcel of you kind of explaining the process and your stuff more from there.
Okay.
And
Okay,
then what did
man.
you want to say, sir?
You mentioned neckline. What do you consider a neckline?
Okay, cool. Okay, let's get to
Oh,
that.
okay.
So what I'll do is I'm just gonna do a little bit of like a refresher for all of us. I think it's good sometimes. I mean, we all started at a place where we learned retail when we started trading. Like your support and resistance and that sort of stuff. So let's just quickly separate retail and smart money, and then what we'll do is we'll take smart money and we'll separate that into Forex and indices, and I think that will pinpoint and highlight the differences in my approach to the two. And even though I mainly only trade US30 and NASDAQ, I think it's important to look at how we all first learned smart money, via our other mentors and courses that we've done. I'm talking like 3-box strategies and that sort of stuff.
Yeah.
And where you would see like a lot of absorption on a US index versus not so much on a Forex pair. And the 3 different entry models that I look for on US30 as an example. Shall we do that quickly?
Hundreds.
Okay, cool. So if I just bear with me now, okay, guys. Just bear with me quickly. So I'm gonna try and do it as quickly as possible. So if we had to look at retail, where is my? There we go. I just want to make this smaller. Okay, cool. So if we looked at retail methods, standard retail methods teach us things like, I'm gonna write it just so that it's easier. Instead of me trying to draw it, it's gonna be ugly. So we do support and resistance. We do chart patterns. I'm just gonna close this. I'm just gonna close my Telegram so that my things don't pop up. Okay, chart patterns, support and resistance. We do trend lines. Indicators, moving averages, etc. I won't get too much into it. I think you would all agree with me when we all started trading. We looked at a market printing lower lows and lower highs as such, and we were like, cool, market's bullish, right? Bearish. It's going down. We get taught things like double tops because we have got, let's say, a point of resistance, and we taught to sell these sort of areas. We get taught trend lines, and if price breaks a trend line, we get taught to wait for breaks a trend line, we've got a support that's broken, we're taught to take sales off the retest of the trend line, stop loss back inside. We've got other things like triple bottoms and triple tops, double tops. We are taught things like head and shoulders. What else is there? Pretty much all that sort of stuff, right? That's like standard.
Other than that, I think it's then just going more deep into more candlestick patterns once you for
Yeah, like
an extra
flags and stuff.
confirmation. Yeah. Or like a doji.
Doji candles, morning stars, your bullish engulfings, your bearish engulfings, things like that. Then if we move on, so quick, fast blanket approach, nice and done. nicely done. You can go and trade now.
Now, you know
In
what,
2
Dustin?
minutes.
So I don't want to be that guy who makes jokes and takes the time, but that's like most people's retail courses you've just done in like a couple of minutes.
You can go trade. Okay, you can go trade. Now, smart money, or let's say institutional order flow, as a blanket teaching now, would teach. Let me just quickly, if I go quiet for a few seconds, just my train of thought, just because I don't want to confuse anyone. So as a blanket approach with smart money, we taught things like identifying structure, supply and demand. Let me just put that in there. We taught confirmation. We've got this as Wyckoff. We also know that based on previous sessions that change of character, via credit to the folk, because he basically simplified Wyckoff for us. So change of character flip from flipping markets is pretty much Wyckoff, really simplified. Okay, because we know obviously trading needs to be simple. Often we overthink things. I mean, how many trades did you miss when you were trying to label your automatic rally, your buyers and sellers climaxes and things like that? So that's pretty much that. Then we got to learn about liquidity, and this is where it's important to know retail as well. Okay, so this is where understanding retail benefits you as a smart money trader, because if we know that 95% of people are actually losing money trading, and 95% of people form part of the liquidity, it's important to identify where that liquidity is lying. If we looked at our double tops, we know if I was trading, let's say US30, and I saw a double top within a higher time frame PRR supply area, and I'm looking for a sell, and it's bearish structure, I know that I'm possibly going to wait for this double top to be absorbed. Yes, price can still close below, and this is where a lot of confusion with retail trading comes in. Do I use the wick? Do I use the body? And ultimately, you get taught that it doesn't matter. Must my trend line touch the wick? Must it touch the body? Or how do you draw a trend line correctly? And then you'll figure out that it doesn't actually matter. It comes down to what have you back tested? What edge is your system giving you based on back testing, and sticking to that system. But this is where, like, just to avoid going off track, this is where understanding retail can benefit you as a smart money trader, because you also know that when we get to the 3 different types of entry models, how in an area like this, if I'm looking for a liquidation of these areas via absorption, I'll wait for that liquidity grab. I'll wait for price to close in, and I'll go. If I am looking at one of the other modules, like a change of character, I know that this isn't a change of character because there was no break of structure first over here. So I would first want to wait for something like this, and then I know I need the change of character to happen here, and the inefficiency might be up there. We've got some liquidity building, and even though I might be entering at a worse price, this would be more of a confirmation. Given our successes. So that's where that can line up quite nicely. I'm just going to make this a bit smaller. Let me know if you are with me or if I am maybe going too fast. Are we good?
I'm good on my side.
Same here.
Crystal clear.
Okay, cool. So basically with structure, we look for lower lows, lower highs. I'm just recapping. Remember, we all know this now. I know we do. We've got So I'm just going to do this. There we go. You know, so we'll get to time frames. We'll talk about time frames now. But what, as a blanket quick course or crash course to smart money, your first step is to identify structure. Are we bullish or are we bearish? I know that when I first started trading and I didn't know a thing about smart money and I was trading purely retail methods, I used to also, another question is like, how far do you zoom out? You know, am I too far zoomed out? Am I too zoomed in? Often I would look at a chart and I'm like, yo, she is bearish. She's bearish AF. And before knowing what a change of character in order flow was, I was often late on that trend change. You know, so the market looks bearish, but meanwhile she's been bullish for 2 weeks. Yeah, you know what I'm saying. So, and that's purely based on swing points being taken out. You know, and then you know we after structure we taught supply and demand. So if we what am I doing there today? So I'm just going to put this in. Right, it's going to make for a nice explanation afterwards. Yeah, we taught to identify supply areas, and we told that supply areas are usually your last upward. So in a bearish market, it's your last upward move before the downward move that caused the break of structure. A valid break of structure and a change of character we know is one that leaves behind inefficiency in the form of imbalance, also referred to as fair value gap, FVG, and or unmitigated supply or demand, supply in the case of a bearish market structure. And obviously with that a valid breaker structure being one in which that leaves behind inefficiency or comes from a place that's left inefficiency. That can also be in the form of displacements. I know Ment talked a lot about a displacement in price action. Do you remember that at all?
Yeah. Although also ICT also touches on displacement quite a bit.
Yes.
Yeah.
Yeah, that's right. Okay, let me just clean that up. So I'm sitting outside on my patio and I've got 737s flying over my head.
All good, man. Got to
But
keep cool, bro. This heat's too much.
but I've got my I do have my noise cancelling earphones on, or headset, so you shouldn't hear it.
Yeah, if I'm going to be honest, we didn't. I didn't hear anything, bro.
Okay.
Good, at least you know, good quality earphones.
It was hella loud right now. I couldn't even hear myself. Okay, cool. So we know as a blanket, smart money teaches structure, supply and demand, and then you know you've got areas to work with. So you got breaks of structure, and then you've got confirmation, and the best confirmation that is taught is that of Wyckoff. So you taught. I won't go into it, but you pretty much taught about the spring, and then a validation of an AR. So that first automatic rally. I'm not talking about the tests and things like that. I'm going to talk about UTAD and spring on a sellers and buyers Wyckoff. But pretty much that when the automatic rally is taken out on a Wyckoff schematic, that in its own causes displacement. So that would be leaving behind fair value gap, imbalance, unmitigated supply, and when price closes below your automatic rally, that in itself is your change of character. So your change of character is happening over here, and then we taught to identify where was the order block lying that caused this displacement, and then we would wait. So often you would find something like this, and price would, let's say, fall even more. And you taught about inducement. So this is just inducing early sellers over here. So people that it's almost like the dumb smart money, they'd call it. Just because we failed to identify liquidity for price to only come tap the area and make it move. I mean, we've seen.
Yeah, no, I see that. Just stop sharing.
Let me reshare. Sorry, guys.
Thank you.
Boeing's there. It's the retail guys scoping you out, bro. They're just talking shit.
Okay, I don't know if what you got there off that bit.
The last bit I heard was you talking about inducements. They're trying to induce early sellers, and then I kind of
Yeah,
the dumb smart money.
like the dumb smart money. So basically, I can't remember which mentor or what do you call them, which program it was, but they
Guru.
or which guru, yeah, whatever you want to call it, education dude or whatever. he says all that dumb smart money is smart money traders who struggle or fail to identify liquidity, and that's what makes liquidity so important. And that's why, for me, understanding retail methods is so important to helping you find or seek out the liquidity. Obviously, you can we can post some links for people who want to learn Richard Wyckoff's methodology of institutional order flow, and the whole snowflake schematic. But I think we'd all agree that it's not necessary. It's really not necessary to look. It's good to go over it, I think, but it's not necessary to go and label every flip and move in the schematic, and that's why I love the change of character. Oh damn, do that. And that's why I love the change of character. Sorry, guys. Let me just do that like that. Because the change of character, which flipping markets teaches, is literally this snowflake. That sort of schematic. Now, so that's step 1, structure. Step 2, supply, and then basically you are just wanting to look for, in a lower time frame, that same thing. So this thing happening, that's all it is. And then obviously your targets would be liquidity. Okay, so that's a quick crash course in 10 minutes, retail and smart money. Cool.
100.
Okay, now what I want to do is I want to split the smart money into, I'm going to go down and I'll say
Forex and indices.
yeah, SMC, and I will split it. How's everyone's connection?
Mine's good on my side.
Same, yeah.
Okay.
Good.
Get this here. Okay. This one's going to be very short, like I said, and maybe JR can spend a lot more time on it if he wants. But I think I can speak for him as well. And you've seen also on our channel that we don't even post anything with Forex. We literally do US30, and that's what we've mainly been focusing on. And on the odd occasion, you'll see some NASDAQ and gold, more gold than NASDAQ of recent. I still to this day,
US,
yeah.
US30 is just NASDAQ that smokes crack.
Literally, yeah. No, it's like I still to this day believe if you can just figure out one pair, you never have to work a day in your life. You know, that's the one thing. It's just trade what works for you. And I know people that can't help but trade in the morning. So what they do is trade the DAX, and they're done for the day by 1 p.m.
If I may ask, so does that mean have you got guys who, or do you yourself maybe sometimes trade DAX's German 30, right?
Yes, I don't. I've never
Okay.
taken a trade on DAX. I'm just saying, like it will all come down to, you know, I know there's a lot of people on the channel that mostly only trade gold.
Yeah.
There are guys on the channel that are trading crash and boom, and there's some weird shit. But I know
I suppose like it applies to all markets.
yeah, no, that's the thing. And I want to say that again. The smart money applies to all markets. Really, it doesn't matter if you trade in Bitcoin. It doesn't matter if you trade in the Swiss franc, an Australian dollar. It doesn't even matter if you're trading corn or wheat and sugar, like as commodities. You know what I'm saying? It's all got to do with identifying the footprint left by major financial institutions. Because if there's one thing we can be sure about, is the fact that we, as your street traders, can't move markets for shit. We can't. We don't have that sort of capacity. So when we can see blatant displacements or obvious, signs, and we just want to jump on the back of that. So just before we go too far off topic over here, so I want to try and get to the juicy stuff.
Yeah.
The golden nuggets that I said I wanted to
I'm excited,
share.
bro.
So once you've learned, or once you've done a smart money course, and I just want to mention quickly that we posted in December that we have a course that is being dropped. We wanted to have it released by the end of December, but at the same time, also, December, festive season, family. We didn't want to push that deadline and push ourselves to a point where we were releasing garbage. So we would decide to rather take our time getting some of the good stuff out. And it's going to just see there. Are we still connected? Oh, we got 10 minutes. Okay, cool. So we wanted to take a little bit of time because we want to put this in such a way that it's like a all you need sort of guide. You know, you don't even need to do baby pips, like literally. And I'll give you a quick sneak peek of the contents over here. If it opens,
it'll be quite refreshing as well, because also if you do cover the indices, like you say you're going to do now, where you split Forex and indices, I think that'll be a breath of fresh air. The only smart money person I've really found, other than Ment, and Ment doesn't really tap too much into the indices, that tries to talk about the indices with smart money concepts, is ICT.
Yeah.
But I don't trust too much of his concepts. He's blown quite a few accounts live on ICT in a circle trader.
Sounds like he needs to learn the concept of risk management.
No, the thing is, I think also like a lot of it is, especially when you try to do publicity stunts, because his concepts are solid. I just think that sometimes the ego does get in the way when you've got like a couple thousand people watching you trade.
Yeah,
you know what I mean?
It can happen. I think you need to decide before something like that, what it is that you're willing to do. Here's it over here. Can you still see my screen?
Yes.
Okay.
Busy checking your content page.
So we're gonna try and not make it too long, but we've been working very, very hard on this thing. So this, this is some real introductory stuff to people that don't even know what pips are and leverage and what is trading. And it goes into retail methods quite a little bit more in depth than what we just did now. It was just a blanket approach, and then there's some of the advanced, real juicy stuff. And I'm not gonna give too much away because there's we're gonna let that drop soon. But I'm going off topic. Let's quickly get into this. So this approach to smart money concepts, any smart money concept course you would have done out there will teach you this: structure, supply and demand, confirmation, liquidity. It's literally, you enter your trade, you put your stop loss in, and when it comes to actually executing and doing it on your own, sometimes you can feel like you don't know what you're doing. You are taking you're looking at a swing high in your mind. I'm just going to quickly illustrate what I'm trying to say. So in your mind, you are seeing something happen like this, and you like, cool, no, we've got a breaker structure, and all of a sudden now you like, cool, we've got a change of character, but meanwhile price is literally just tapping into the supply to only come down, and then it leaves you thinking like, what the hell, only because we fail to see that on a higher time frame, the market is just providing us with a let's say a less fractalized move, because we know the market is fractal even in you know what I mean. If you've got your high low on a lower time frame, you're seeing things like this. Price is still going down, but you see that makes sense. You
100%.
guys know what we're talking about. Yeah, we've done this together as well.
The internal structure that creates larger structure.
The internal structure. So I'm pretty much going to move this up here because I'm going to be repeating myself with regards to the Forex side of things. It's mostly really the golden nuggets is based on the indices and how they can help you prevent missing out trades, and just the nature of indexes. So the first difference between the Forex and the indices is what I wanted to say, is that when it comes to your supply and demand zones, and I'm talking now your higher time frame POIs, when price enters those points of interest and we go down to lower time frames, we see this change of character happening all the time. It's easy to go from a 4-hour to a 15-minute, and you'll see it. If you're starting on, let's say, a 30-minute, and you go to a 1 minute for your entry, you will see it. It happens most of the time. That's what would happen. Yes, you do have instances where you'll see a liquidity grab with major economical events, and you see price go down, and you don't really get that full mitigation. That does happen. When it comes to indices, and I'm going to show you how you find your best POIs in a moment, but there are 3 different ways she can enter, and this change of character is the one that happens the least. Okay, because like we mentioned, Forex, Euro USD, a major pair, GJ the Dragon, GBP JPY, GBP USD, all those pairs, they're major pairs, they move between 100 and 150 pips a day. I'll put this thing away. So everything in terms of smart money between Forex and trading with indices, smart money, it's literally exactly the same in terms
Sorry?
of your structure, and your supply and demand. The differences I'm speaking about now are strictly relating to your third step, which is your confirmation criteria for entry, and what you look for in terms of ways to enter. And the ways to enter are purely determined by the nature of those markets. Remember, Forex markets involve a base currency and a quoted currency. Indices markets, which are US-based markets, are made up of a pool or basket of stocks. So the nature of the two pairs or assets are totally different. But the smart money will be the same in terms of supply and demand, and obviously your first step being structure. Smart money will be, like we said, the smart money concepts works on all time frames and it works across all markets, but it comes down to the nature and your experience with trading them. So what I was saying is that when it came to entry criteria and confirmation, this change of character I find, based on my experience with trading US30, happens the least. This will happen in a low volatile market. You will see a change of character like this happen at 8 a.m. This is 2 hours before London. When London, as an example, when New York happens, when NYSE, the New York Stock Exchange happens, opens at 4:30 GMT +2 with daylight savings right now for Joburg time, because of the sheer volume and liquidity in the markets at that time, the volatility is what I'm talking about now, the momentum. We will see things happen, quick, big spikes, and we'll see. Oh, I right-clicked. We will see big spikes like this, to a point where, cool, yes, that's a change of character, but we might see something like this. She won't come and fully mitigate. We might have, let's say, yesterday's high printed. Okay, that's the high for yesterday. Yesterday she closed over here. We see a whole Asian range. We see a breakout during London. Yeah, right clicked again. Sorry. So yesterday's high, we see she make a low, a close, then we see the Asian range. Then we see a breakout at London. NYSE opens and she pushes up and she takes yesterday's high, only to come down even more, if that makes sense. So then what we end up seeing is we've seen a liquidation of yesterday's highs. So US30s, US30 often likes to liquidate swing points, just like the first video on this channel with the Euro USD, the liquidation of swing highs and swing lows. She will use highs and lows, or even swing points made during the course of the day. So it might not be yesterday's high that she will go and liquidate during NYSE. It could be London's high, as an example. So classic absorption, and we'll go into a chart now in a moment. And you often would see, so obviously the third one least is the change of character. Then you've got absorptions, and then sometimes you've got a structure identified. You've got your break. Previously, you've got your supply area, and you've seen some inducement, and then NYSE, she comes up, and price is approaching your point of interest. So what we do is we go down now to, we're waiting for a bit of a lower time frame, because in our minds we want to see a change of character happening in there, for price to literally just tap the supply and fall, and you don't even have a chance to come and get a little change of character and another retest, whatever. So there was no absorption that took place. Price literally tapped supply and melted, versus absorption versus change of character. So those are the three most common entry models, and in my opinion, the most common being your absorption. And Main speaks about this as well when it comes to trading Nasdaq and US30, and it all comes down to the sheer volume in those markets. Cool. Any questions on that?
So obviously, like you said, so when you talk about, like, obviously these are 3 ways you'd enter, right?
Yeah.
Obviously letting absorption be the most frequent.
Yes.
Obviously you'd want to wait for your swing point to get absorbed before you choose to enter. How would you enter after the absorption? Do you wait for a retest? Do you just see a wick and then the close of the candle?
Yeah.
Like,
so,
how would on a live chart, the other two, other than the change of character, how would that look on a live chart? Just
can I delete? Can I clear this? Can I delete this?
hundreds.
Okay. Cool.
I'm cool with it.
Boom. It's gone forever. So I'll give you an idea. We're on a daily chart now, but I'm just going to easy quickly just to answer what you're saying right now, what you're asking. Okay, so market had printed a low after breaking structure over here. Got me?
Yeah.
Okay. We had a supply area which prices tapped into over there. Okay.
Yeah.
We saw a little bit of a reaction, and I mean, if you really wanted to, you could say that was a change of character that happened over there, right?
Yeah.
Okay. Now, instead of Forex, you would go, cool, this was the supply area that caused this change of character, and if you take this one out, I'm going to go one more time on that supply area. Right?
Yeah.
And now this is where that approach, you'll get taken out. Obviously, we've seen what happened here, but this was just the best part for me to give an example.
Yeah.
So, price. This is technically the protected high. So we're waiting for this point to be taken out. Price takes it out. Okay, we're on a daily chart now. But let's say a 15-minute. And she closed like us. So let's say this is only really a couple, not too many pips. The best entry would then to be to take a trade like that.
Okay, so kind of like meant similar to his CS entry.
Literally similar to CS entry, yeah. And then obviously targeting liquidity to the downside.
Yeah.
But,
which makes sense to me, because obviously that's just, I thought it would be something like that. I just wanted to make sure, because I've noticed, like you said, with indices, they don't kind of give you most people look for is they want confluence on confluence on confluence.
Yes.
But because of the sheer volume, you're not going to get that with NAS or US30. So when you see a footprint being kind of, I suppose you could say, instead of looking for the footprint, you're watching it being printed, and that's where you want to head in.
Yes.
Does that make sense?
Yeah. That's the shit. So I mean, what I like to do is I like to use a 15-minute chart for that close. So let's say NYSE 430 price pushes through into liquidator point. Before I just start freaking out and jumping into the market thinking I'm going to miss the move, or like, I would wait, and I want to see if that 15-minute candle closes above or below. So US30 loves, and this is where I think it entices a lot of retail traders. And I think, and I have nothing bad to say about retail. This is just my methodology, and the way I trade is with smart money. But I know a lot of retail traders who do make money. And I, US30 likes to support it, respect its support and resistance. Okay, I'm going to say it.
Yeah.
Okay, but the thing is now with the retail not knowing, do I use the body, do I use the wick, whatever, I would wait for in terms of absorption for the body to close below the point. So if this was my new swing point, so obviously it was this one previously.
Yeah.
And because the body closed below that area, I wouldn't consider it like a valid break of structure, if that makes sense. You know, we've spoken about valid breaks of structure and things like that. Remember, valid break of structure would be one that has inefficiency.
Yes,
So
yes.
the fact that you can't consider that a break of structure to the upside here, and now use this as your structural story, is because we've got, you know, before you saw that body and you just saw the push to the upside, and then started leaving a wick, we've got immediate selling pressure over there. And I think that's also a lot of the banks trying to entice people into early buying. Oh no, the resistance has been broken, I'm going long, and that sort of thing.
Yeah, no, I meant also to says very often, he says he doesn't consider any type of wicking to be a break of structure. It's just, like you said, absorption. It's only a break when the body closes above your structural swing high or low for it to be considered a break of structure. So I fully agree. And even then, if you look at some of his backtest videos, it also depends on the amount, like the strength of the candle that breaks it. You know, obviously, is it like a little? You have to zoom in to actually see that the body's closed in, or is it a significant looking break upwards?
Sorry.
I know, I was just saying, like, even when the body closes above the structural points, it still needs to be somewhat of a significant push up or down, depending on whether you're looking for a break of structure, so upside or downside. I've seen him in his back testing videos very often also say, I see that it broke up, it closed above, but it's such a minuscule amount that it closed above, he still wouldn't count that as a break.
Yes.
You get what I mean?
Yes. No, I agree. Okay. Yeah, look, I don't want to drag the video out too long. We can do multiple sessions going forward, but I'm just going to quickly give you the golden nug that's been really working nicely for me. JR and I were actually also discussing like win rates and stuff earlier, but what I'm going to tell you what I basically do. I mean, I'll show you, and it's not something I came up with myself. I learned this from watching someone else pretty closely. Just some creds there to the festa, you know.
My boy Clint.
but have a look here, bro. So do you see on the daily? So what I do is I go onto US30 and I go on the daily. Let's not zoom too far out. So look, I've just gone back a little bit. Obviously, I know what's been happening, but I want to give you an example because I'm going to show you multiple trades that I've taken.
Yeah. Do you mind, after you've shown us the golden nugget, if I just ask you a few questions?
Yes.
Okay, cool.
Yeah, for sure. So we've got like support there. I'm just going to make this a bit thicker. Do you remember on the channel? And I'm just going to quickly open this up over here.
Cool.
I don't know if you guys saw. So we were waiting. There were some key areas. This is going back.
Sorry, I'm just looking at the gifts on the right hand side. Jordan Buffett, and the monkeys in a car.
Where are we?
Sorry, that was just very funny. No. Great chimpanzee.
I actually watched the movie recently again. It's brilliant.
Oh, it's a good movie.
Okay, so what are we here? 14 December. So I'm just reverting back to the channel to show you what I'm going to take you through our thinking over here. So when was this posted? US30. This was on the 17th of December. Okay, so I've got there 33475. And price had already wanted to open a trade. I'm just going to open a paper trade. Let me just cancel that. Okay, I'm just going to leave it out here just to show you. Okay, so we had that break happened there. Let me zoom in. How do I zoom in here? Okay, anyways, this is what I'm talking about. So we've got support here. You can see where the chart bounced over there. And there was a displacement that took place. You can see there's a massive push that happened. Look at what happened when price came back to test. And this is what I'm talking about, Sebastian said, with the neckline. Okay, so I'm not talking about supply and imbalance. Okay, yes, there was imbalance. She filled 50% of the imbalance, but I'm talking about breaking and testing the neckline. It's the same as over here. You see here, breaking and testing the neckline. Price didn't come all the way down to tap deeper mitigation, if that makes sense. So what I do is I use the daily for POIs, and when price enters those areas, I'll go down to lower time frames. Let's have a look here. Wait. We'd go to lower time frames to look for things, for this sort of thing, and look on the lower time frame, 15 minutes. Check what happened here. Breaking and retesting the neckline. Retest the neckline. And that's where, these trades, I know a few people that caught this move. So it's do you get what I'm saying? So instead of like now, overcomplicating smart money, and I'm like, cool, got supply area, shit, which one's you gonna go to? It's literally been break, retest. Yes, you go down to lower time frames. You are looking at structure in the sense of, where she's broken to. And I mean, guys, this is 8,000 pips. So just to give you an idea, let's say you got in late and you got in here and you didn't even catch the full move. You only caught, let's say, I'm going to just go there, that little bit.
That's that, yeah.
With your smallest lot size of 0.01, that's 10,000 Rand right there.
That's beautiful.
Yeah, it's insane. And then, I mean, we didn't foresee that she was going to range like she did, but understandable. It was the end of the fiscal year. It was Christmas, New Year's. People were jolling. It was holiday season. There were a lot of, bank holidays.
CPI.
But at the same time, smart money still prevails. Look how she tapped into areas over here.
Yeah.
And then she came back into those areas which you might have previously been waiting for and missed. So you got another opportunity.
Sorry, and then just a little thing I'm also seeing is after tapping the supply, once again, I'm already seeing a little bit of a support or resistance being broken, testing the neckline, getting a little bit of a breaking the neckline. Yeah, it's just insane actually.
So now check this, and if we carry on going down further, I just want to see. Okay, this video was posted on the 3rd of Jan. And by the way, Nasdaq reached a POI of 11. We literally got here. Like I'll go back there now. I just noticed.
Just giving, I think, like about a 10-minute warning on the call.
No worries. price actually ended up going through this supply area. So it was there was a chance, it was a risky zone, just like this picture.
That's
So I'm
gold.
quickly doing a bit of an update. Yeah, that's gold. Key level 33,800. So we remember we were looking for 33,800. 33,800 was over here, and we actually saw a reaction over here. On if you see on like a 1 hour, I'm gonna show you. Check 33,800. Where was it? Oh, this is kind of a bit easier. Yeah, pretty much right there. So you can see she absorbed 33,800 actually. We see with that wick before coming down. But anyways, same thing. So 4 hour, you can see it quite clearly, just like you can on the daily. As we saw price breaking supports testing over there, same thing happened over here. Price broke above with this candle. We saw a reaction off that area. Now look here for this week. Price is above here. We've got some targets. I don't know if you guys have seen our perspective short term for US30, and that's the liquidation of 35,000, which is this wick. I don't know if you saw us speak about. I'll just recap for anyone else. Do you see where price made her moves to the downside?
Yeah.
Look at this area on the weekly. She made a wick, and 3 weeks later, that wick liquidated, absorbed that point before actually coming down. We could be seeing a similar thing happening here before coming down. But then again, we will obviously be monitoring, the macroeconomic side as well. If inflation data continues to remain fugazi like it is, we might see new highs getting printed. But because of all the stimulus and things like that have been pumped into the US, and the future rate hike as foreseen, or global recession talks, we could see money printing, not money, price printing lower lows to the downside. So
Okay.
we'll see what happens there, but that is pretty much it. I would take 1 or 2 trades a day, and some days no trades. It depends on those PRIs. The reactions off your higher time frame, your daily and 4 hour break and retests on US30 is, like I said, you're not going to get less than 5,000 pips sometimes, and that is 10 grand with a 0.01. So take 3 or 4 of those, you're talking 30, 40k within a week, sometimes less. Depending on what sort of account you're trading on, but at the same time, you can. But that is pretty much it. I would take 1 or 2 trades a day, and some days no trades. It depends on those PRIs. The reactions off your higher time frame, your daily and 4 hour break and retests on US30 is, like I said, you're not going to get less than 5,000 pips sometimes, and that is 10 grand with a 0.01. So take 3 or 4 of those, you're talking 30, 40k within a week, sometimes less. Depending on what sort of account you're trading on, but at the same time, you can have 1,000 rand account and be making some bank.
100%. So, is it cool if I start asking some questions?
Yeah. So I see we're going to get disconnected. Can I stop the sharing and we chat then for a bit?
Hundreds.
Cool.
So the first thing I did want to ask is how do you find your win rate with the way you've been trading recently? If you do know what your a ballpark figure on what your win rate is, average consecutive wins and losses, stuff like that.
It's a good question. Joe and I were actually chatting about this earlier. Funny enough, so I can tell you now personally, my win rate has increased when I'm trading like this, and I don't think it's much that I'm doing differently. I think it's purely the fact that I've simplified it for myself. I'm not approaching the markets in this massive fashion of trying to really nitpick and dissect. I'm keeping it simple.
Okay.
Just like and I'm not focusing on multiple pairs. I'm sticking to one pair and I'm sticking to the same thing.
Mm.
You know,
And
yeah, Joe and I were chatting. Um, this the trades I'm getting into now, win rates over 50%.
that's really good.
Yeah, it's the highest it's been for me, but I have my own issues. My challenges isn't hasn't really ever been with win rate. I get myself into very good setups.
Yes.
More than 50% of the time, my challenge is, and Joe will laugh, is more on the psychological front of maybe holding on to good trades for too long,
Oh, I
charging out
see.
too late, paying myself. You know what I'm saying?
Yeah.
Um, I can flip accounts quite often, and sometimes I let myself get stopped out just because I wanted
Listen,
more,
Dustin,
more.
Dustin, never forget, Clint lost out on 800,000 Rand because he said, not a fuck is he going to not get a million one trade. And it went
Yeah.
from 800,000 to 2,000. So I think not even the most professionals or professionals haven't done such.
Well, you just made me feel better.
Dude, I'm telling you, like even like that's the thing. I think sometimes when you've got consistency in trading, you can let the cards fly a little bit. You can have fun with it. You get where I'm coming from.
Yeah, absolutely.
The
Hey,
next
I want.
question I want to ask is,
Yeah.
sorry if you don't mind, is on often, how do you find your consecutive wins versus losses? Do you find you rack up a bit more consecutive wins per week or a loss like just around there? Because obviously you've got a plus 50% win rate. So do you find your consecutive wins hit your consecutive losses? Do you see like maybe one or two losses before you hit your win on average? Just feel like just curious question like that. What's your biggest losing streak you've had?
It's
If you
it's
don't mind me asking.
it's a good question. So my consecutive losses would occur before the stock market opens on a Monday. So if I
Oh,
get in
okay.
before NYSE on a Monday, if I get in before NYSE on a Tuesday, it's fine because the market's already open. But in
Okay.
my thinking is that if it's before NYSE on a Monday, it's still technically a weekend in the US. Um,
Oh, that's
and
very true.
so I don't know if it's something that happens to me psychologically, and then obviously, if my emotions do get the best of me, and um, you know, I encourage one or two trades a day, but I am human, so there are days then that
Yes.
I might take 3 or 4 or 5 trades, and those days I'll see more consecutive losses, and it's literally because I have made a lapse in my own judgment. Um, when it comes to not dissecting, when it comes to the technical side of it,
Mhm.
and PRIs and areas of which I'm going to trade, my win rate is like over 50%. And but I don't know if I'm answering your question.
I just want
It's hard.
to.
It's hard to
No, no,
explain.
I get you.
There are literally some days I will take 2 losses in a row and done for the day. There are other
Yeah.
days where I wake up and I chill for the whole day. I get NYSE open, and then at 6 o'clock, price is where I need it to be or where I've been waiting for. The
Yeah.
trades go straight into blue. You know,
And I get you.
it's really hard to. Maybe I
But you wouldn't say
analyze
if. But from what I'm hearing, from what it sounds like, because I doubt you've hit like, what's it like a 4 thing? Because from what I'm hearing is already you're saying, okay, cool. You maybe hit 1 or 2 losses, you take a break the next day, you hit like blue, and then you sort it. So, is it safe to say maybe around 2 to 3 would be, from what you can in a ballpark figure say, would be most probably be your max losses?
Well,
The only
can I
reason
ask
is to.
huh? Can I
No,
ask in a
that's it.
different way? Sorry. Do you have a bad day, a bad week, or a bad month? Do you
Well
notice that
said.
over a week
Thank
it's a
you.
bad week? Or is it like 2 weeks, you don't have 2 weeks of badness, you have 1 week of badness, or it's just like 1 or 2 days of badness? You know what I mean?
Definitely more than 1 or 2 days.
Yeah. Like,
There has been, it's happened a lot where it's
mm,
been a bad week. I've also had it where it's been a really great week, and it lapse in judgment, and it results in a bad week on the last trading day, sort of thing. And that could be, a good week could be literally even having break even,
mm,
you know. But, not losing money is good at the end of the day when it comes
And
to
then
trading. I have had bad months as well. Um, so yeah, I'm trying to think how I can answer it, but I do have a solution.
90%, 90%, sorry, Das, 90% of your bad runs and my bad runs is purely based on psychological lapse in judgment, not necessarily the system that failed, you know? It's always
It's got nothing to do with the trading. It could literally be I had a fight with my lady. Not that we really
okay.
fight, but it could be
No, but I get where you're coming from. Life ends up happening.
yeah. Now I feel
like load shedding.
you know.
Bruh.
and when that power comes on, you just start ripping it.
Yeah. Yeah. No,
Okay, no, cool.
it's just not. It's just absolutely not the system. I'm telling you now. Like those nuggets there on US30, just that simplified. Oh, you can drink a margarita and freaking trade like that. You know what I'm saying? It's
Yeah.
so simple, but it's sticking to it and um, focusing on um, all those psychological things.
Yeah. If I may now ask another question, you say things like that you may be partial a bit too late when it comes to trade management and profit targets.
Yeah.
Let's start with trade management. Do you nowadays partial? Obviously, I know when you flip accounts, you kind of have a few nugs that you put in that you'll close some off, so you pay yourself and you let the rest run. Is that still how you're doing it, or do you kind of more have okay, my stop loss is set, this is set, I will partial at like a 1 to 3, I'll pull out 50%, stuff like that. Like, how do you manage your trades?
So I think it all comes down to my daily buys. I can tell you
Yeah.
I do end up going wrong is if my daily bias is wrong. Getting stopped out because I took profit too late would be because I got optimal entries. My analysis was on point, but only 50% of it was on point. The first 50%.
Uh,
The second part, where I thought now price is going to go and trades that expect first and the second mitigation to take place, as an example. So
okay.
um, and because now you're like, cool, I'm going to take it off the table. 6 grand, she would have hit 30, and
Okay, I
you're like,
get you.
cool, calm down. That does happen to me. I've let lots of money go off the table, like holiday money. We could
Yeah.
have traveled, um, and it's being greedy. I'm confident
Mm.
enough now. I know the system works, and I trust that the market's going to give me multiple entries to come.